Good day, ladies and gentlemen, and welcome to the show. I'm glad to have you guys here on this Sunday. It's a Sunday. It's the 12th of January, 2020. Almost said 2019. Anyway, let's get started. Let's open up the charts right here and take a look at what's going on. Why are we at the Fed site where we have the St. Louis Fed? Their website here. Why are we there? The thing is what the Fed does has everything to do with Bitcoin and what Bitcoin's doing. And you know, an awful lot of people they don't make this correlationship between what Bitcoin's doing and monetary policy and the overall financial system itself. You know, and if you want to know where the Bitcoin price is going to go, you've got to actually study the financial system. You've got to have the financial system is like the ocean. It's constantly moving, you know. There's tides coming in the ocean, and there's tides going out, and you know, there's people out there who study the ocean. Well, let's say that I think they call him an oceanographer or something like that. Anyway, you know, and let's say you had a guy that went through college, he got his college degrees and everything else, you know, but he is in an office someplace. He doesn't know what's going on in the actual ocean. You have somebody else out there who's taking water samples and watching the tides and has tide charts, and he would know a lot more about what's going on because he's putting the practical amount of research in to understand what's going on. And it's the same way with the financial system. It's constantly moving like the ocean, and you have to do consistent research into the financial system to know what's really going on and how this applies to cryptocurrencies. And believe me, it does. So if you want to know where cryptocurrencies, you want to really stay on top of the cryptocurrency market, you've got to study the financial system and find out the dynamics of what's going on within the financial system itself. So that's why we're at the St. Louis Fed. And what we see here is the Federal Reserve went through a period of what was called quantitative tightening. This is where they're removing liquidity from the general financial system. Where do you think the money come from that goes into Bitcoin that went into profit all the way up to $20,000? That excess liquidity. When people put money into something that is like Uber, and they put a lot of money into Uber, and they put a lot of money into SoftBank, and they put a lot of money into WeWork, and all these different companies, you know, that, and they've pumped up the stock prices on companies like Netflix and Amazon and all these different companies and Apple and all these different companies. They've pumped the stock market up to the moon from all this excess liquidity. The Fed, during their quantitative tightening process, was draining that liquidity out of the system. Believe me, the fall of Bitcoin from 20,000 down to where it is now had to do with that fall in Bitcoin when they're draining that excess liquidity out of the system. And I'm going to tell you what, we can see this downward line here. See this amount that the Fed has on balance sheet? This was when they were drawing the liquidity out of the system. Well, we can see right here where it bottomed. Now we see a turn back upwards, and they're adding liquidity to the system. Totally different scenario. But here's what I want to get at with you guys. What I really want to discuss is there's a lag period. So they dump a bunch of money into the system, or they take a bunch of money out of the system. If they pull a bunch of liquidity out of the system, the results of that doesn't happen for a few months into the future before we feel the effect of them pulling the money out of the system. If they start dumping money into the system, like they're doing now, it is a few months before we start to feel the effect again. It doesn't happen. So we see exactly when they started dumping the money into the system again. It was on September 11th. Well, you know, there's about a 6-month lag there, you know? And so we're looking at probably toward the end of the first quarter of this year before we start to feel the effects of this liquidity that they've poured back into the system. Well, we do have immediate effects. They had to do some of this dumping of liquidity into the system to support the repo market immediately. But the buying of T-bills, well, let's see some of the things that they're doing. That's the total assets. Now, we're going to take a look here. The New York Fed boss says it's time to overhaul the repo toolkit. So the Fed is going to, William Dudley, who used to oversee the Federal Reserve's interactions with financial markets, said that the central bank should introduce a long discussed but never implemented tool to ensure U.S. cash markets remain calm. What they're talking about here is a facility for the repo market. So this is moving toward a continuation of funding the repo market. They can't stop now. It's like central bank intervention now with quantitative easing and also supporting the markets can't stop, because if they stop it, everything will crash. And they know this. So this is creating a trend of pouring liquidity into the system. It's going to help to feed Bitcoin in the longer term. Short term, we're seeing some movement up in the cryptocurrency market. Today, look, 218.2 billion. Let me just refresh the page. 217.4. So it's fluctuating around 217, 218 billion. Up quite a little bit from the under 200 billion it was just a little while ago. So we're seeing some movement in the cryptocurrency to the upside. And a lot of people are saying, oh, the bull market's here again. The bull market's here again. Listen, guys, I'm on top of these markets, and I'm here to tell you the bull market is not really here yet again. But Bitcoin's doing good. It's doing better than it was doing. But the bull market's not here quite yet. I'm on top of these markets. I'll tell you guys when I think the bull market's back, but it's not quite yet. I think it's got a couple more months yet before it starts to come in. But I do think that cryptocurrency, by year end, is going to probably be the best performing asset class out there. And by year end, this is going to catch the attention of all of these money managers and pension funds and everything else. It's going to start to catch their attention big time, because they're going to look at the year-long book of what Bitcoin and the cryptocurrencies have done. They're going to say, wow, we should have been in that. So that's going to start 2021 really good, isn't it? Anyway, that's where the trend's going. But we can see that overall trend looking back at the start of Bitcoin till now. You got something that was basically worth nothing, and now it's worth today $8,138 US each. And you could have had them for like 20 cents. We see that consistent movement upwards. It's not going to stop. It's not going to stop. It's not going to stop. We see fluctuations downwards in price from time to time. We are in a bear market right now. We're still in the bear market. We could see more fluctuations down in price. But overall, looking at the long term, it's going to continue, guys. It's going to continue. What do we got here? We got an article that says, this trend that preceded Bitcoin's 330% growth in 2019 forms again. And so the trend they're talking about is a dramatic increase right now in Bitcoin longs. So they're going long on Bitcoin, big time. But that's only one part of the trend that's going on right now. We got a second part that's going on right now. A second part is that the halving is coming up. And, you know, this hasn't been priced in yet. In my estimation, the halving has not been priced in yet. And we could see, it says, in a few months, the so-called halving will take place, which is when the block reward of Bitcoin gets cut in half, effectively resulting in a 50% decrease in the inflation rate of the leading cryptocurrency, a price model created by the pseudonym Quant Plan B, accurate to 95% R squared when backtested, suggests BTC's fair value will rise to $50,000 after the May 2020 halving. Hasn't been priced in yet. It says geopolitical risk may be a boon for Bitcoin. And, you know, I'll tell you, I don't think all that stuff that's going on in Iran and Iraq is over. In fact, it could be just starting. Sad to say, you know. It'd be nice if that would just disappear and everything would go back calm again and peaceful again, but I don't know, guys. It says geopolitical risk may be a boon for Bitcoin. With the ongoing conflicts between the U.S., China, and U.S. and Iran and other spats taking place, Bitcoin may begin to prove itself as a digital, non-sovereign store of value in these trying times. So, the halving hasn't been priced in yet. Got to take that into consideration. I'm thinking myself that we, at some point, maybe even slightly after the halving occurs, we're going to see it start to get priced in. And then we're going to see toward the end of this year that Bitcoin is probably going to be the best performing asset class out there. I mean, you're not getting nothing on bonds now. What, a 10-year bond? 2%? Less than 2%? Are you kidding me? And that's the best bond out there, the United States Treasuries. You know, they've getting the best yield. You buy an Italian bond, you even get less. Can you imagine investing in Italy for like 10 years? I mean, they're probably going to leave the European Union and the euro, and Italian bonds will be absolutely worth zero. I'll tell you, it's crazy what's going on out there right now, you know. We've got so many risks that it's like one of these risks is going to hit pay dirt one of these. I mean, when I mean pay dirt, I mean it's going to be a black swan. Like, we're just juggling all these risks. Like Deutsche Bank is ready to collapse, you know. A war getting started, or a number of other things that can happen. There's just too many of them out there. One of them's going to break, and it's going to be a big problem, you know. And cryptocurrency, you got a problem, cryptocurrency is the solution. Because take a look at what's happened in these countries like Venezuela, you know, and Iran now. I mean, they're reaching out to cryptocurrencies as a store of value, but not just a store of value. They want something to use besides their local currencies. Anyway, thank you guys for listening to this show. Like and subscribe. Give me a thumbs up. And we'll catch you guys in the next episode. Bye-bye.